Everybody for attending. We just wanted to go through the key takeaways for the second day, starting with Amil's presentation on the determination of liability. He talked about gift taxes under Code Section 2501. That just like the estate taxes uses the rates under Sections 2001C. You report the gift taxes on Form 709. And like so many of the other presentations, there's always a distinction about whether you are a U.S. resident or non-resident. The next presentation, Kelly Aylward had talked about taxable estate deductions. Just a couple things I think there to remember. Debts of the decedent are deductible, funeral expenses, and administrative costs. So certainly things to think about as you're going through the estate. The next presentation were the special valuation rules and FLPs. Elliot Rothstein and Todd Pavlich talked about some of the code sections under Chapter 14, specifically 2701, which really focused on freezes having to do with recapitalization of interests. Section 2702, which really focused on GRATs and CUPERTs and what you can and can't do with respect to those techniques. 2703, which had to do with buy-sell agreements, and 2704, which I know they spent a little bit of time on, but really dealing with some of the rights and restrictions on the transferabilities of interest under a partnership or corporation. Luke Bean then focused on the generation skipping transfer taxes. There he touched on that the GST tax is applicable to both gifts under Chapter 12 as well as estate transfers under Chapter 11. He mentioned that there were three categories of skip. There's the direct skip, there's the taxable termination, and there's also the taxable distribution. That the exemption from GST tax is unified with the estate and gift tax at $11.4 million per person. And it is a 40% tax. And then the final presentation today was by Amy Schnitzer and talking about disclaimers and certain life estates. She had three good takeaways that were part of her presentation. With respect to disclaimers, timing matters, that you have to look at both state law and federal law when making a qualified disclaimer. And something to think about, disclaimers of property involving inter vivos transfers during your lifetime are complicated. So if that's what your clients want to do, something to think about. And then just some general rules and takeaways with respect to the disposition of certain life estates. This is under Code Section 2519. The gift tax counterpart to this was Section 2044. And really as a recap, she had written, where a transferee spouse makes an inter vivos disposition of any part of his or her qualifying income interest in trust property, the spouse is treated for estate and gift tax purposes as having transferred all of the interest in the entire property. So on behalf of myself, all of the faculty members, and MCLE, really appreciate everybody taking the last 2 days to be with us. If you have any questions, please feel free to reach out to me. If you have specific questions on any one of the presentations, please feel free to reach out to that specific presenter. And again, thank you very much.